Sitting down today with Brandon Willis, owner of Ranchers Insurance, to talk about an issue that we've just been hearing about a lot lately out west as we kind of wrap up the PRF season. And we hope to highlight some of the potential issues today. And we're going to do three things. First, Brandon, we'd like to know what we're hearing about. Second, what are some of the potential issues to producers? And then finally, if producers are approached about these issues, or maybe have even signed up, what options do they have? So Brandon, tell us a little bit about what's going on.
Well, I think you've got a few things, maybe 3 to 5 different things going on. But the gist of it is we're hearing more and more about individuals who are being asked to sign up for what I'm going to call a no premium PRF. Basically, it is the pasture range on forage insurance program that USC offers. People are coming in and saying, hey, if you'll sign up, you won't have to pay premium, but you're going to have to share a certain percent of the PRF payments you receive, the indemnities. 30 to 50% will go to the investors or whoever else is partnered with you. This has been going around for a while, but this year we're receiving multiple calls a day on it. It's very prevalent, and that's what we're kind of going to talk about.
So Brandon, are there some examples out there that producers could go read about or learn about this?
I wish there was. I've looked online. I cannot find any good publicly available information. It seems to be when producers hear about it, it's from a crop insurance agent sitting down with them on their table. I wish there was something publicly available because I think that could help. USJ could look at that and could offer their opinions on it.
Okay, it sounds pretty good. Walk us through some of the potential problems with these arrangements.
Well, I think the first problem that I potentially see with it is it's a rule called rebating. Rebating is something that's specific to insurance. In simple terms, rebating is giving somebody something of value so that they will do insurance with you. They'll purchase insurance from you. It could be as simple as, hey, Weston, if you want to buy insurance from me, I'll give you a boat, as an inducement to have you purchase from me. You can't do that in the insurance world. USJ strictly prohibits it. Most states strictly prohibit that. USDA, I'm just going to summarize kind of what they say about it. They say, no person shall pay or offer to pay directly or indirectly, either as an inducement to procure insurance or after insurance has been procured, any rebate reduction of the premium not specified in the policy. So what's happening with no premium PRF, I'm just going to call it that, it seems like one way or another, the producer's premium is guaranteed to be paid. I've also heard about an offering of a low interest loan to producers if they'll stay with an agent. Both of those, I think, have the potential to be rebating.
So Brian, I heard you say inducement a couple of times in that description. I know that one that I looked at said that basically didn't require the producer to go with any specific agent.
Yeah, so I've also seen one of the contracts that have been offered to producers on this no premium PRF, and it says two things notably. One, you don't have to purchase it from any specific agent. Two, it's not an inducement, it says. The problem is I think you have to look at it, and I think USDA will look at it. What's the reality of the situation? It's undisputed that if somebody offers you an insurance policy and there's no premium, you're more likely to buy. You're more likely to buy higher level. I mean, if you came to me today and said, hey, I can offer you car insurance, you'll pay my premium, I'm going to buy the highest level car insurance I can. That's just common sense. And I think what USDA is going to have to do is look at just the facts and circumstances and what really is happening with that contract. The other aspect, you can buy it from any agent.
Right.
The challenge with that, quite frankly, is if Weston Taylor came to Brandon Willis and you said, hey, I'm going to do this no premium PRF, I wouldn't feel comfortable selling a policy to you. And the reason is I have to sign and you have to sign the insurance contract that says there's no rebating allowed. And I wouldn't feel comfortable signing that in that case. So I think most agents would be like myself, and we would really not want to deal with that situation.
Okay. So besides for rebating, are there other issues around this?
So the other thing that I would be worried about is what they call scheme and device. That's it's basically a USDA rule that says you cannot adopt a scheme or device to obtain insurance when you're not eligible. At times, those who seek to misuse crop insurance attempt to circumvent the rules. I'm going to read you something a little bit boring, but just to give you an idea what this means.
Sure.
The crop insurance regulations state, if a person has knowingly adopted a material scheme to obtain insurance coverage to which the person is not entitled, The person shall be ineligible to receive any and all benefits applicable to any crop year for which the scheme or device was adopted. A scheme or device may include, but is not limited to, creating or using another entity, or concealing or providing false information with respect to your interest in the policyholder. How could that be how could this no premium PRF be a scheme or device? Well, those who are offering to pay the premium in return for indemnities, those people are not eligible for PRF. They don't own the livestock that are grazing the acres that are being insured.
Got it.
But the contract, in a way, is they're on the hook for premium and they're going to receive an indemnity. And so, I'm not the decision maker, but I just know as an agent, when I see this kind of a proposal, it worries me.
Okay, so outside of this no premium PRF that you kind of have described to us here today, is there anything else you're hearing about that's kind of concerning to you?
As an aside, we're hearing more and more of landowners who have, vast amounts of land who want to enroll in PRF. The challenge is PRF is for livestock producers. This is a program that is supposed to help livestock producers during dry conditions. And I think the last few years, meteorologists have told us we are either through or in the midst of a 1,200-year drought.
Right.
You've seen some very big PRF payments going out the last few years. And I think some people who don't have a proper perspective on just why they're going out, and I think some of those people are trying to sign up. That's wrong. The general rule is you have to have livestock. And I think for the long-term success of the program, if there's neighbors, if there's producers who see that type of action happening, they need to talk to USDA. That's patently wrong.
Okay, is there anything else that we should talk about here today before you kind of offer your advice to producers who have been approached about no premium PRF?
The one thing that I did mention earlier that is worth bringing up, rebating. Whenever we sign that policy, it says there's no rebate involved. The agent has to sign it, the producer has to sign it. If we sign a false statement there, we are subject to criminal or civil penalties. The contract says that everybody can pull out their PRF statement. It says that in the language that they signed. As far as this no premium PRF, ultimately, I don't make the decision on whether this is against the rules or not. USDA will be making that decision and perhaps somebody else along the lines. But I'll just say this from a practical standpoint. It needs to stop. It's a horrible idea. Look, PRF has kept a lot of producers in business the last few years. It have been very challenging years out west. It's been very dry. You've seen some large PRF payments. That has made the difference between some people staying in business who might be otherwise out of business. So let's talk about the reality of the situation. I worked on Capitol Hill. I was a Senate staffer back in the 2008 Farm Bill for a few years. I worked at USDA. I was a senior advisor to the Secretary of Agriculture. And then I oversaw the Risk Management Agency and worked with the great employees there, overseeing the crop insurance program for 4 years. And I can tell you that there is no way that the decision makers on PRF, Congress and USDA, will let PRF continue if these abuses happen. There's just no way. In 1, 2, 3 years, if these were to grow, PRF would be done for everybody. They would be over. And so there's just no way that half of the PRF payments can be funneled to investor types who are not producers. It's the long-term effect of these types of proposals are horrible for livestock producers.
Okay, so for producers who have either signed up for these types of agreements or who are being approached about these types of agreements, what advice do you have for them?
When I worked at USDA, my dad would call me. We have a sheep ranch. He had a sheep ranch. He'd always call me and ask me, what do you think about this program? And I just try to give him the best advice I could. Sometimes it was do it, sometimes it was don't do it. And I would look at this. Here's the advice I would offer him. If he came to me and said, hey, I've just been offered this, my first advice would be don't do it. It's a bad idea. Legal reasons aside, legal possibilities aside, it's a bad idea. Don't do it. But if he said, well, I've already done it, or I'm really interested, then what I would tell him is you need to talk to USDA immediately. You need to share any contracts that you've signed or any contracts that you've seen. You need to get all the information from the individuals offering it to you, any contracts, any appendices, whatever. You need to send that to USDA and see what they say. Ultimately, you need to make sure that they're okay with it.
Right.
And we're on this video, we're going to put the phone number of a place to reach out to. It's the USDA's Western Regional Compliance Office. They're the ones you should call, and you should take their advice.